Andre Alexander. We've been working with you for on many different transactions. You've helped a lot of our buyers move smoothly, and so I wanted to first of all say welcome to
Thank you
our
so much for
Realty
inviting me.
Podcast. You're welcome. So Marc, before anything, we're gonna talk about the money. Everything about the money. Um, let's find out. I don't know. Last time I had you here, I didn't. We were kind of rushed, but I want to try to ask you more questions. How did you get into the world of mortgages? Was it passion? Like, was it by accident? Like, what brought you to this world?
So what brought me to the mortgage financing basically was my love to help people. So I wanted to help people. I saw like a lot of bad experience with like friends and family going through like mortgage financing, and like they had like issue, the bank were not responsive, they were getting a mortgage and then it was like horrible rate, like they signed everything and then they realized it was a bad rate. So basically I went into mortgage because I wanted to help people instead of like just trying to like money. I wanted to like give the best customer service. And like I hear often from clients, they're like, oh, we reached a bank or we reached other broker and they told us like our case was impossible. And for me, nothing is impossible. There's always an option, and it's my job to like tell you what's the option and all to help you get to that solution for you to be able to purchase home.
Nice. Now, I want to say something. I hear a bit of an accent there. Do you speak another language?
Yeah, I speak French as well.
Okay, nice. What's the weirdest and most unexpected thing you've seen in a mortgage file?
Well, I would say like the main thing, let's say I do like original meeting with the clients, they tell me the registration, and then when it's the time to purchase the home, then they have loaded all their credit cards, they have new debts, so it doesn't work anymore. So
Yeah.
that would be like one thing that happens sometimes.
Yeah. I often say to our people or buyers is that like once you get qualified and like you're on your way, you got everything, just wait before you make those big purchases like a car or sometimes we get people, they purchase a home and they get so excited about decorating. It's mostly the ladies, the ladies in the home where they go and start shopping for furniture. And then, they have this huge furniture financing on their bill now, right? Which affects the rates. Or they have, they go and load up the credit card. So I always say to people that like, wait, get the key and then go shopping. Don't do anything before then, right?
Yeah, exactly. Like you need to like wait until the end. When you get the money, then you can like manage the rest. But until you get the money for the home, just wait.
Yeah, exactly. So if you were not a mortgage broker, if you weren't into mortgages, what would you be doing instead?
I love like sports. I would do like anything related to sport.
Do you?
Yeah.
Okay. What kind of sport are you into?
I love like running.
Oh, yes, we
Like
talked about it
yeah,
last
I
time.
love running and I love skiing. So I'll be probably in the mountain doing something there.
Okay, so like more like a mountain goat or
Yeah.
something like that.
And I
Okay.
love like mathematics. So anything to do with financing, mathematics, I love like this. So I have
Okay.
love for maths and love for the outdoors.
I think you kind of answered this, but like how would you spend your money when you're not calculating other people's rates?
How I would calculate, repeat that?
How do you spend your money when you're not calculating other people's rates?
So for me, I love like investment. So like I would invest. I worked previously in the stock market, so I invest in the stock market, and I find like what's more stable. It's real estate. So invest in real estate. finding like a good opportunity to buy, to rent, and those type of things.
Yeah. Yeah, I mean, like a lot of the times where people ask, ask us, like, should we invest in real estate? Like, I have investment in bonds and things like that. And I just, for me, it's like, it's kind of like buying, the stock for gold or actually buying gold. I rather have something that I can feel and touch. And real estate is just that. I feel like that is a secure way. I feel very secure with it. And it is getting harder and harder for people to qualify, right? But before we get into that, what's the one myth about mortgage brokers you wish people would stop believing? Is there a myth that people think about when they look at mortgage brokers that you wish that they would stop believing? I can tell you a lot about real estate. Yeah.
I would say like they're just in for the money, and like we're not, like we're there to help people get the financing. Instead of like we're basically like all like self-employed, so we're there to help you. We're not let's say you go at the bank, they're bank employees, and like they're trying to get their commission. For us, like I would say like all the team I work with, like we're all there to help people, help them like accomplish their goal of basically acquiring a home or like doing investment and building their portfolio to go to the next level. And it's
Yeah.
not just like, let's say for us to just provide financing, it's also to give them the option to guide them through finances. So like
Yeah.
let's say life insurance, how to manage their life with money, like we help them like through all the process.
Yeah. So one of the things that I always tell people, especially immigrants, I'm an immigrant, so I tell my fellow immigrants who are new to the country that, when you're working with a mortgage broker, you want to tell them everything, anything and everything when it comes to your finances. The more you tell them, the more close you are to reality, the better it is. Because oftentimes I think the myth is like they feel like, you're somehow going to report it to, like we don't like this body, but I'm gonna say it, the CRA, Canada Revenue Agency, and which is not true. The beautiful thing we have in Canada is we have privacy laws, right? So whatever they tell you is absolutely confidential, and so whatever they tell you stays with you. But you can help them maneuver through what needs to happen in order to qualify. My dad used to say, like in Canada, and maybe North America, I would say, or Western countries, everything is like has got its own box, and you need to fit within that box. In other words, you need to fit within the framework of what it is that they want. If you don't fit, if you're a little bit a nicer box, or like you got a little curve here or there, and you don't fit, that's it. You just don't qualify. And so your job and my job is to fit the people that we know. They tell us all their whatever, and just like organize them so that they fit in that box, right?
Yeah, exactly. Like basically like I'm like basically a lawyer. Like everything that the client talked to us, like it's confidential, so it's not to be released. And then let's say for me, I have access to over 50 lenders. So instead of like basically you go at the bank and you hope you're gonna fit into their box. Like for me, I take your illustration and I look at all the different like boxes, and I say, okay, like for you, that's the best option. It's gonna be like you're gonna get the best rate, the best illustration. It's a great lender.
Yeah.
So like it's very good. And the other thing with newcomer or first time home buyer, like for me, before I work as a teacher, so I love to educate. So I teach as well. The broker will teach you about like first time home buyer program.
I love that.
They'll help you build your credit, and they can also like tell you like how to guide like your financing in Canada, because like it's a brand new country. It's your first home. Like there's a lot of thing going on. So you need someone to guide you, and that wants the best for you.
Yeah. And you know what? One thing you said there is that I love to educate people. And I think that, like, we're very lucky to be working with vendors like yourself because I think that's our main criteria. We want people that are there to help people, to educate them through the process so that, because if you can tell the prospect, the client, that these are your options, forget about me, like me removed from this situation and my interest removed from this situation. But these are the different options that you can have, and these are the pros and cons with different things. But you decide what's best for your family. I think that's the best way of going about business. I think that is the way to, you know, set yourself apart in all the different industries in today's world. So that was a very key element you said right there. So thank you very much. Let's jump into qualification. I think the title of today's podcast is "It's All About the Money," and so let's go ahead and deliver that. How can we qualify for mortgages? Like, how can a person that doesn't know anything about mortgages, but they have a wish to own their own home, how do they qualify? What are the different things that you look into? Like, my first call to you, right? Hi, Mark. I saw you on the podcast, Realty Podcast, and I want to qualify. I'm about to I want to buy a first home. What do I need? What would you say to that?
Yeah, so the first step is basically to do an application. And when we do the application, we're looking at the two main things, which are the income of the client. So like, how much income are they making? And it can be income from you, your spouse, but also like, let's say you have children, child care benefit counts as well. So it's something.
Oh, really?
Yeah.
Child care benefit counts as an income?
Yeah.
Wow, that's
so it
good.
Helps like a lot like people.
Woohoo, that's good. That's awesome.
And then the next thing is the debt. So we're looking at all like the liabilities, like how much debt you have, and then that's the two main thing to give you the most money, and then after it's the down payment.
So what is sorry to interject, like what would be a what would qualify as a as debt? Like if you're filling out the application, what is it?
So the debt are basically like car payment, student loan, personal loan.
Okay.
Car and credit card.
Gotta pay that OSAP, ladies and gents.
And I always say, like, let's say people are purchasing a home, like I say, like, pay the debts that are the highest interest first. Those student loans, like, they can be significant, but the payment is always smaller. So that debt, I'm always like, leave it, it's fine. But the credit cards or car loan, those are bigger payment, higher interest. So you want to minimize those.
Okay. So student loans, keep them, but the car payments, get rid of them ASAP. And one of the things that actually did stop me from being able to purchase a couple of times was because of my car. My car payment showing up on my credit card, it was just like horrific. So yeah, I agree with that.
And that's one thing. Like, let's say you have a mortgage broker that start with you like from the beginning. Sometimes people will reach out to a broker like when they're about to purchase a home.
Yeah.
But if they start earlier and like they're like, okay, like I'm not ready yet, but I need a car. Well, call your broker, ask him like, if I buy this car, what will be the impact?
Yeah.
Will it like destroy my buying power, or it's okay? Because it's okay to have some debt. You just don't want like that debt to represent so much of your income.
Yeah.
And the broker will tell you right away that.
Yeah. And that's the thing, see, the beautiful thing with like a broker is that like I think you have access to them 24/7, just like agents, whereas like when it comes to the bank, like I don't think you can go to a mortgage specialist and say, "Hey, so if I were to purchase this car, will it like damage my getting actually qualified to get mortgage from you guys?" Right? Because like to me, the mortgage representative at the bank is working for the bank, where the bank, like if I'm working for a bank, why would I tell you what you need to do to kind of get money from us when you don't actually qualify, maybe, or possibly? You know what I mean? So that makes a lot of sense. And I love the fact that you guys are 24/7, because a lot of the deals, a lot of the transactions do happen after the fact, right? So that's important. Now, so if I were to do an application, is it like a physical, like a form sent to me, or you just fill out, you just ask the questions over the phone and just fill in the forms, and then you just kind of tell me over the phone? Like, how is that exactly? Just, I really want to get into the details of it
Yeah.
this time. Yeah.
So for me, how I work, I do like a phone interview. So over the phone, we do the application,
Okay.
and then I send also a link. So let's say someone doesn't have the time to like talk over the phone, I send also a link to my system so they can do it themselves.
Oh, nice.
One good point I want to mention is like for me, I don't do credit check. Often you'll go at the bank and then you just want to discuss with them, and next thing you know, they ping your credit. And like you're like, wow, I did not even give consent. Like, why they do that? But the bank, they do that by like standard. That's the procedure. For me, I really look just at your illustration. I don't look at your credit. I've been doing that long enough. I have an idea of like if your credit will be like like will be okay or not. And then
Satisfactory. Yeah.
Yeah.
Okay.
so that's the
Okay.
advantage.
Yeah, that's the other thing I say. And so I'm glad you said it too, because I say, the difference between the bank and the mortgage broker is that when you go to like ABC Bank and the other one and the other one, every single one you go to, they're going to basically go ahead and ping your credit report, right? So here's one here, then another one, then another one. Whereas a mortgage broker, they pull it once and then they go shop for you with different lenders so that they don't have to pull it every single time for you. And I don't know if that's a myth, that's the truth, but I feel like that is a truth, right?
Yeah, that's right.
Yeah.
Like I just like I had a file recently. One lender was like, no, it's not gonna work. Right away, I send it to another one. Did not have to do it twice, and then like the second one accepted. So
Oh, there you
it's
go.
that's a benefit.
I guess I kind of knew stuff a little bit, eh? All right. So, what advice would you give someone that is trying to qualify right now? What rates are, with rates being what they are right now?
So like basically like the best rate right now, you're looking at like 3.79. So it's like it's nice. It's below 4. It's below 4%.
Wow,
And it-
3.79.
9. Yeah. Which like if we're looking like a year.
That's nice.
Yeah,
Yeah.
like if we look like let's say past year was like in the 5%. So right now it's much
Oh my
nicer.
gosh. Yeah.
And the thing like sometime like you want to qualify with the lowest rate to give you the most buying power. If you end up like not going to the maximum, it gives you more flexibility. But always
Okay.
qualify with the lowest rate to give you like the most buying power.
Okay. And can someone really hack the system to get better rates, or is that a myth?
So the act to get better rate is to use a broker. That's the act. Because
That's
if you
good.
just go
Yeah.
to the if you just go to the bank, they only offer you the rate. The broker sees everything that's going on, like so they know like what's available, and they'll tell you like this is the best option. Sometime I'm like, I know that let's say when it comes to it's more for renewal, but
Yeah.
like they'll tell me I'm with that bank and like do you have something better? I'm like, yeah, I can get you something better, but I know that they are so hungry to keep you
Yeah.
that they will drop it like way lower. So I'm like, go back to your bank and tell them you want this, or else they will you will leave.
By the way, I love that about you, because I always say to our clients, I say, you know what, talk to Marc, because one of the things he'll do is that, yes, first and foremost, he'll try to help you himself. But at times, if he sees that you can get a better rate by talking to your bank, he'll tell you, and he'll tell you what to say to your bank to get the better rate, which is really, really awesome. I mean, like, when you're looking at these rates, they're like for how many years? Like,
So like usually it's like people right now like 3 years or 5 years,
yeah.
and like you can have
And that
any like
makes a
yeah,
difference. I
yeah.
mean, like 3 or 5 years makes a huge difference. So like, here you are, you're able to get a better rate for 3 to 5 years. And because of that, you're able to do other things with your family, right? So question for you, if like somebody is looking, if what is one habit, if you were to point one habit, financial habit, that you wish every single applicant that's coming to you had before coming to you? What would be the one habit you wish they had? What would it be?
Uh,
Would
I
it be
was
would it be more like to like have their stuff well well filed away? I would imagine that's something that's like really hard to like, like I would hate it if somebody asked me for my stuff, because it's like, oh my gosh, I gotta call like the accountant, I gotta call this person. It's like I do get it done anyway, but it's just I find it so hard.
Yeah,
It's
like
like
because we deal
what
with
is
so
the
much documents, like if they
yeah.
have all their documents ready, it helps a
Mm,
lot. Like
yeah.
it's much faster. Like employment letter, pay stub, and T4s, like those
Yeah.
are like
Ah,
just have
okay.
it ready. Like I would say, like save it every year. Have like a folder in your computer, like I don't know, like accounting or taxes, and then it's gonna be much easier later on.
Yeah.
And like bank statement is straightforward. Like you just most people they just do online banking, so that one is an easy one. But employment letter, pay stub, and T4 just save them already. So
Okay.
when you call, you're ready for it.
Like it's obvious to me that you're really, really passionate about mortgages. But what is the one thing that would like that's like you absolutely it like bothers you? The one thing that would like if you didn't have to deal with that. What would it be?
Uh,
You're
like
probably thinking, oh my gosh, there's more than one thing. Okay, spill the beans. Tell us
yeah, I would
everything.
say like one thing would be like basically like lenders that are irresponsive. Like I have like some lender they're horrible to deal with. So
Oh my
often
gosh,
I'll
yeah.
warn the client. I'm like, listen, like this is the best rate, but the lender is horrible. So like expect like a lot of document, expect like last minute stuff. Like that's the way they work. And then that's
And
like
by
the
the way, I love that too, because I always say to my team, like, I'm like, you know what? Always prepare the client. Always set the expectations so that they know what's coming their way. If we know that this is going to happen, then, they know. They made an informed decision. But if you're like surprise people, they don't like that. So as long as you tell them this might happen, it's not nice, but it's gonna happen. It's kind of like, when you go to the doctor and they're like, okay, I'm about to give you the shot right now. So you're gonna feel a bit of a pinch, and then they just, give you the vaccine or whatever. Same thing. If you kind of expect it, you're like, okay. But if you're like not expecting, that's why kids like scream so loud, because they weren't expecting something, right? So yeah, yeah.
yeah, so that one, and then like the other one would be like let's say in terms of clients, like clients
Anticipate.
that don't like provide their documents. So
Yeah.
I get like all the financing, and then like I'm waiting for
Oh my gosh, that's the other thing. So like one of the things I don't like is when, I used to do it in my younger days in real estate, where I would run around town with people that were absolutely not qualified. They were not qualified ever to purchase a home. And here I was, driving around town, showing properties. I had one lady where I showed, I think, like the most number of homes. I feel like it was maybe 36 in my career, which I have talked to agents that have shown 50 homes to one person, which is crazy. But at 36, I was like, there's something weird. So finally, she admitted to me that they actually had filed bankruptcy. And here I was showing them homes. And I'm like, what is going on? Because we finally found the one she loved. only to find out that they won't qualify because they just filed bankruptcy. And I'm like, what am I doing here?
Yeah,
So,
and that's
yeah.
another thing. Like
Yeah.
basically, for realtor, like it's essential you work with a broker. The broker will be able to like tell you where, like, help you qualify the client, if they're qualifying for mortgage or not, what's their buying power. And
Yeah.
then the other thing would be like in term of like bankruptcy, like there's nothing that's impossible. People with bankruptcy can buy with double bankruptcy, with like consumer proposal, whatever is the situation, like down payment, with no down payment, there's a way to make it work. But like you need to talk to a broker. If people just go at the bank will be like, oh, bankruptcy, it's impossible. That's it. Like it's
Yeah.
done. A broker will have access to so many lender. They'll have access to, let's say, the best lender, the alternative lender, and private lender, so they can tell you, okay, that's your situation, what's available for you. And then if they have the requirement to make it possible, then they can do it. If like they have to work towards it, then they'll work it. And that's like, for me, what I love about this is also accompany people, because one of the biggest goal of people is to own a home. And then sometime like I talk with clients and they're discouraged. They're like, oh, I'll never get home. Like it's impossible. And I'm like, no, like just do this. Here's the step. Do it step by step, and then you'll be able to have. And then they got their home and they're so happy. So
Yeah. To me, I always say, like, whenever you do a good work for someone, whenever you do good work, you feel it, and the same thing is true when you do like crappy work for someone. And like the whole thing is, why don't you do the good work? Because it feels good. You know what I mean? So, okay. So for some home buyers, is there anything special that's happening right now? I've always been asked, like, by different people. They're like, oh, are there any special incentives that now I can qualify for? There's that whole, like, you want to talk about the savings,
yeah.
the
Yeah, I
like,
would say like the main one right now, it's the first time home buyer saving
yeah,
account. It's one that a lot of people don't know still, and it's so like
it's crazy.
outstanding
Yeah.
because basically all the money you put in that account is tax free. So it helps you pay less taxes, and who doesn't like to pay less taxes to government? Like every
People would be like watching us and they'd be like hating us, but it's yeah. Anyway, sorry,
yeah,
continue.
so like
Yeah.
this, and then all the interest you make in that account, it's like tax free, so you don't pay any.
So how much can you put in? Is it like a TFSA account where you put in a certain amount, like you have a certain amount per year that you can put into it? Is
Yeah,
that
so
how it
it's
works?
8,000 per year per person. So
Okay.
let's
Oh,
say you
per
have
person.
yeah, it's per person. So
Wow.
like, and it's not like joint. So like married couple, like the husband would open one account, can put 8,000, and then the husband open an account 8,000.
Okay. So what about if you were what if can let's say one spouse open up an account in like one bank and then go and open up another account?
I wish it would be great.
How would they know? Do they know? Is there a way they'd know?
No, it's like when you're gonna withdraw it for
Yeah.
the purchase of a home, then they'll realize like you're over like contribution, and then
Okay,
like
so
then
it's
CRA comes back.
$8,000 per year. Okay,
Yeah.
got you. So if it's 8,000 per year, let's say
Per
right now
person.
it's per person. Let's say it's November, or let's say even if it's December, right? And can I, let's say, put in 8,000 in December and then another 8,000 in January?
Yeah, that's perfect. Yeah.
Ah, okay, very good. So
Yeah.
and it's tax free.
Tax free, the interest is not taxable. And why I love that one, why I always tell, like, that's my first conversation with first time home buyer. Like, do you have it? Because, like, let's say the RSP account, they have like a program for first time home buyer.
Yeah.
But RSP, you have to pay it back. So that's why the FHSA is so good. You don't have to pay. You don't have to pay it back. You use it for that, and then like if you would have like anything extra, you could convert it to RSP. You can move it, but
Okay.
So-
you can move it to your RSP.
yeah.
Okay.
So it's
Also, I hear a lot of people talk about like taking their down payment from their RSP account.
Yeah.
Can you explain how that works? Like,
Yeah. So basically, that one you
Yeah.
can withdraw up to 60,000.
Okay.
So you
From
can
your RSP for
exactly.
your down payment.
Yeah,
Okay.
and that's per person again. But the downside to that,
Be
you have to pay it back 60
within
times.
15 years.
Yeah.
What happens if
Like that's the downside. And then the other downside of RSP compared to FHSA, let's say you're buying a home. Let's say like you're just watching this podcast and you're like, I did not open the account. I'm buying a home like in the next month. Well, you can go to the bank today or tomorrow and open an account, put the 8,000 and enjoy all the benefit.
Ooh, did you hear that? That's why you need to be watching the Realty Podcast, everybody. Okay, very good. Okay.
But if you basically have like RSP account and you forgot and then you're like, I'm going to open an account and buy, it's need to be 90 days in the account.
Oh,
so
wow.
you cannot like use it right away.
So yes to FHSA account, which is first time home buyer.
FHSA account. So first time home buyer saving account. Like they
First time home buyer savings account. Okay. Yeah, so I was like, is that really?
There's so many acronyms. Like it's like
well, there's also the TFSA, which is a tax-free savings account. So can tax-free savings account be used?
It can be
towards
used, but
purchase?
it's just like there's no advantage for first time home buyer. So it's just
Okay.
like you're withdrawing the money. So for me, I always say like, let's say the FHSA account is like if the RSP account and the TFSA account are the baby together, the best of both worlds would be like the FHSA account.
So I have a question. Let's say I needed, I don't know, $50,000 as a down payment.
Yeah.
I would take this money, like let's say I have, I don't know, $20,000 in my FHSA account.
Yeah.
So I put, it sounds so funny when I say FHSA. I don't know why. It sounds a little weird in Persian. Anyway, so imagine you take the money from that account, $20,000. The other $30,000, I could get a portion of it from my RSP and a portion of it from my tax-free savings account. In fact, I can take the whole amount from my tax-free savings account or the whole amount from my RSP account. Which account do you think is better for me to take that 30,000 from?
So like after you take like from FHSA account, for me I would go to the RSP account because you have like a benefit of like
Oh, really?
yeah, because you can take the money out
Okay.
and you have to pay it back within 20 years, but you have to think like over 15 years, sorry. And then after 15 during the 15 years, you can do so many things. You could refinance or do different things to pay it back like easily.
But my question is, why wouldn't you take it from the tax-free savings account, the TFSA?
TFSA?
Yeah.
Because like the money there's grows and all the interest that you make there, it's not taxable.
Okay.
So because like all the interest is not taxable, I would leave it to grow it because the more money you can make. So instead of like touching that investment and already withdrawing it and then having to start back at, let's say you're at like 50,000
Yeah.
and then you fall at 20, like it's a big difference in terms of like return on your investment.
Okay, that's really interesting. So let's move over to our next category, which is people that own a home and then they want to move up to another property, which we call them the move up buyers, or they own a home and they want to move down to like downsizing to another property. How do we go about like helping these folks be able to sell and buy at the same time? Like, can you talk about bridge financing a little bit for people to kind of get an understanding as to like what that process is like?
Yeah, so basically bridge financing is when you have a property and basically you're going to use that money from that property to buy the second one. If you close it before the purchase of a new one, it's all good. But often the people did not sell their property or they want to test it out. They want to say like, oh, I want to buy this property, I want to downsize, but I'm not sure if I'm going to like it or not.
Really?
Yeah.
Okay.
So the bridge financing will allow you to get like the financing to purchase the new property while holding the other one.
Okay.
So it's higher interest rate, but it's usually on the short term period. And then with that, people make a decision. They'll see like if they are selling, they'll sell their property and then everything gets settled. Or there's people that downsize and then they test it out. They're like, oh, it's working for me. I'm going to keep that property. Or no, I don't like it. So they're going to sell the new one and go back to the old one.
So the question here is, number one, how do you qualify for this bridge financing? My understanding, and you can tell me if it's true or false, but like I understand that you need to have a firm sale on both of these properties, meaning there's no conditions of financing, inspection, what have you. They both of them need to be a firm sale. Is that correct?
No, it's not.
No?
No, you can like basically they just want to see that you're selling it. So if like it's on the market and you're trying to sell, like you'll be able to get bridge financing.
You don't need a firm sale
Some
on
lender,
both?
no, so it's really depends.
Wow.
That's the benefit of the broker. Like they have access to so many lenders. Some will require firm sale and some require just you.
I legit had so many conversations with so many different brokers saying that you do need a firm sale. So that is very interesting that there are lenders out there that would be okay to. Wow, that is huge. Okay, so I would imagine obviously the homes that if they're just wanting to see it be sold, like be for sale, and we should talk about, should be able, like I would imagine that the interest rate or the rates are a lot higher because they don't have a firm sale. They don't require a firm sale.
It depends. Like often it's like
Really?
the same rate. Yeah. Like I have like some land because like lender
Very
basically
interesting.
they have like products, so
Okay.
they understand like people's situation, like the downsizing
Yeah.
and Canada's population is getting older, so a
Okay.
lot of like people that like their children went on they went like in their life they move out, they want to downsize, so there's lender that created product to help them with the downsizing.
Wow, that's
So-
very, very interesting. So, the next thing when it comes to bridge financing with the money, okay? So if I have two homes that I own simultaneously, how does it go about like me actually being able to pay? So do I pay double my mortgage or like how does that work? Because what I explain to people, this is how I explain to people, and you can correct me on camera because again, like you just corrected me about something else. But that is so crazy. I still can't believe what you said. But anyways, the two if I own the two properties simultaneously, right? What I say is that money that you end up having to pay carry over for your other mortgage gets redistributed at the end, like to your new mortgage of the property that you're keeping, instead of having to pay for it as bulk. But that may be, I think the look in your face tells me that was not correct.
So basically, like when you do the bridge financing, you're gonna have to like pay both properties. So that's why, like you have to look if you're able to do that. Like,
But how do you pay? You have to pay both mortgages?
well, if you have both mortgages, but often
No,
like
let's say for like the 10 days, right? So what I thought
like
is
they don't like if it's firm, like that's like it's if it's firm, that's the beauty of it. Like it's gonna be all like transfers, so it's like they're gonna do all the balancing with the lawyer and all the payment will be done. So
okay.
it's more like in the situation where they don't have an offer. Then if they have like two mortgages, then they have to pay both. But like let's say people already own a home, they have no mortgage, then they just have to pay the new one. So.
What happens if somebody is doesn't have a mortgage on their home and they want to purchase a property? Is there any kind of like financing option for them available for that like transition period, 10 days? Or is it done through the lawyer, or like how does that work? Do you know?
Yeah, it will be bridge, and like they will like facilitate like that period between the two.
Okay.
So I'll find like basically with the lender I have, And often, like with lender, it's similar to cars. Like let's say cars, you have like let's say Toyota and Lexus, you have like the higher brand, or like Volkswagen and Mercedes. Like you have
Yeah.
like higher end and lower end. So with the
Yes.
lender, it's the same thing. They'll have like let's say the big bank, like which are like the best rate and everything
Yeah.
is good. And then those big bank will have like an alternative lender, which is like a subset of their service. They give them money to lend, and then for them, they'll lend you for those cases where you need money for like that period, that short period.
Okay. Okay, that's good. Of course, I know you've got some tricks in your bag with regards to different things. So maybe the next, because I think we don't have a lot of time to go into it because I want to make sure we cover all the different types of buyers out there and their financing situations. The next level of the purchasers that we often deal with are your investors. Okay. Now, investors to me are people who purchase a home to maybe rent it out. Those are some of the investors. There are investors who purchase a property to fix it up, right? So they need a little bit of money to fix stuff up. Even home buyers, like they're just buying for themselves and they want to do some upgrades. And then the third category are like your flippers, right? So let's start off with the investors who are looking to purchase a property and they want to rent it. They want to have an investment property. Okay. Do you suggest, first and foremost, if somebody is moving up, right? Let's say actually I'm trying to build my portfolio for the future, right? I'm a buyer. I'm about to purchase. I'm about to build my portfolio for the future. So one of the first things I want to do is, do I go into my like dream home of a detached property to put a 5% down payment and then later on purchase a like the townhome or attached property and then put 20% down? Or is it better for me to purchase my townhome right now, right, with my 5% down, turn that into a, because you know what I'm saying, and then move up to something bigger and then pay 5% on that as well. You know what I mean? For down payment purposes. Like to me, I always say to people, like, start with a small home and then move up to something bigger, because then you have the 5%, because you're never going to move down into something smaller, right?
Yeah.
Is that the right path that
Yeah,
you take
so
as well?
yeah, for me, that's like most like investor, like you need to start somewhere. Like when you look at an investment property, you need 20% down payment. So like if you're like starting up, you don't have that capital. Like if you're
Right.
lucky, you have, but most people don't. So what I always tell people is like, okay, you have one home, now you're gonna buy the second one with just 5%. We're gonna rent the first one and then you move to the second. Then you move to the second. You're saving more money, you're making money with your rental. Then you accumulate another 5%, you get your third property. And you can do that several times with the minimum down payment. So
Oh, really? Is there
yeah.
a cap to how many you can do?
Like usually like when you're like at 4 property, like people will start like
Like lenders.
the insurer will be like, you have like 4 property.
Like, stop that.
Yeah, like you become like more like a serious investor at that point.
Oh, okay. 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 Oh, yeah, because it's an insured mortgage. Okay, makes sense. And so that's the right path then. Okay, that's good. Now, okay, we were talking about somebody who is purchasing a property to rent it out. So that is what they need. They need 20% down is what they need.
Yep.
And then in terms of like, now, question here, appraisals. Do they happen more and more nowadays, or what is the trend that you're seeing, and like what type of properties require
So
appraisals?
when it comes to appraisal, like mostly it's the when you put 20%. So when you're putting 20%, because it's not
okay.
insured, it represents a higher risk for the lender.
Yeah.
So because of that, they have like a system where they do automatic appraisal, where like when that's the case, that's great. You don't have to pay for an appraisal. But most of the time, you'll have to hire someone to do the appraisal of the property. And
Okay.
also, it's
How
like
much is appraisal these days?
so it depends. Like outside the city, inside the city, I would say it's between $400 to $600. Like that's
Okay.
the cost of an appraisal right now.
Okay. Okay, very good. And is it like the borrower that's paying for it? Is it the client that pays for the
Yeah, it's
appraisal?
it's
Okay,
the
interesting.
board that will pay for it. Sometime like when this is more, sometime the lender will have like promotion where
Yes.
they can give you some cash back, and that cash back you could be using it to pay for the appraisal.
Okay. Okay. Very good.
And and then the other thing I wanted to mention was for the when it comes to like investors, for them it's very important to really use a broker, because each lender use like different way of calculating rentals. So in term of like rental that are subject, so like subject rental mean you're gonna get the financing for that rental, or if you own rentals, so like you're buying a new property and then your other property you're gonna rent it. They all have like different calculation. It makes a big difference between each of them, and it could be like hundreds of thousands in difference of the
Wow.
price you can purchase.
Oh, okay. Okay, that was very important right there.
Yeah.
Okay. Let's move on to somebody who wants to fix their home up a little bit, or an investor who is looking to do some reno.
Yeah, so
Not your flipper, but just some reno. So how does that work?
yeah, so like for people that needs to do renovation, there's a purchase plus improvement.
Okay.
So at that point, you'll have to, like, let's say you're not like any person, you want like someone to do all the renovation for you. You get home. It's really the thing that impacts the value of the home. So it's the
Okay.
most valuable like upgrade.
Okay.
And then what happened with that purchase plus improvement? You're gonna submit those documents, and then when you purchase the home, they're gonna hold that money like in trust. So it's the lawyer that will keep it. Once you've done the work, they'll release the money to you, and then it'll be included in your mortgage payment.
Oh, okay. So it's not like they just give you the money, here you go ahead and
No.
kind of like, your parents give you money and you go shopping. Doesn't work like that.
Doesn't work like I think maybe in the older time they would do it, but like now they really want to see if the work is done.
Because people would get the money and go like shopping for something else, or go travel probably. Oops, sorry, can we get more? Because we spend it on our travel or vacation elsewhere. Okay, very interesting. How about flippers? How do they go about getting financing? Is it it's a type of financing, I guess, for like short term, right? And like very high interest rates.
Yeah,
Is
like
that
for a flipper, like there's like two ways. Like one way would just be like get like shorter terms. So like get like a 1 year like term, or get like even
I've seen people do
you can
6
get like
months, right?
6 month, 1
Yeah.
year, or like an open mortgage. Open mortgage mean you can pay it off anytime with no penalty.
Ah, okay. That's a good point.
Or like if you go the private way, like the private way is just like you have to pay more capital. So-
Yeah. Oh, well, that's really good. I really appreciate all the information you shared. I mean, like, there's a lot. I just learned that there were certain things I was saying that wasn't true. Even though I'm telling you, I've had these conversations with other people, but like, I'm like, thank you so much for sharing this information. Really helpful. The word of today is FHSA. First time home savings account, right? And it's $8,000 per person per year that you can put aside towards your down payment. Nobody else, if you're not a first time home buyer, then you don't have access to that. If you want to put money aside for your kids, can you do that for your kids too? Or they have to be a certain age?
You can do it for your kid.
Yeah.
And one that's like in Canada, there's so many divorces.
Yeah.
If people get divorced, they're entitled to that FHSA account. So the government feels bad, so they're gonna do.
Oh, really?
Yeah, they're gonna let you.
Oh, so if you're divorced, you can start, and you are not a first time home buyer.
Yeah, let's say you had like a home with your spouse, and then get divorced. You're buying a new one. You can use that emergency.
You are once again a first time home buyer.
Exactly.
Really? Oh my gosh, that is amazing. Well, thank you so much, Marc, for coming on here. We really appreciate you. So once again, the Realty Podcast, that's the reason why you need to listen, because you're going to get a lot of great tips and tricks about real estate and how you can, find ways to maneuver and get you and your family the best deals out there and build your wealth through real estate. So thank you so much. Is there any final things you want to say here before we wrap it up?
Thank you so much for inviting. It's always a pleasure to help, and
come back again soon. We have more questions there's a lot of stuff out there that I like to ask. So we really, really appreciate you. Thank you so, so much. Thank you, guys.